Morning, Chris. How you doing?
Good morning, Mr. Jones. I'm good. How are you?
I'm excellent. This is Brian Jones here with Chris Hood, professional trader, world's most interesting man, still locked down in Canada.
Still locked down and the hair is coming back. I was just looking at my little video here and I realized just how bad my hair actually looks. I apologize to anyone who's watching. You can cover your eyes. This is like the age-restricted portion of the tape. Get rid of this
blur
hair.
it out. We can blur it out.
I think you should pixel out my hair. But I have to tell you, I'm celebrating the arrival of spring by wearing my South African shirt that's telling me that I'm going to relax and go cook on fire. So I'm ready to hit the grill at some point in the next couple of weeks.
So is that Afrikaans for?
This is Afrikaans. This is the world's sexiest language. All right. So this just means stay relaxed. We're going to go cook. So
Perfect.
Awesome. Got to do it as a thing today because I've got no snow for like the first time in a while. The sun is out. It's getting a bit warmer. It's only just positive now. I don't know what it is in the temperature things that you guys use down south. I've never really understood why you guys do that.
It just is, Chris. I don't know. There's a lot of things I don't understand, but I'm used to it now. So I think everything else sucks. You know? It's weird when you don't have a scale to compare things to. You know, somebody tells you it's such and such, and it just doesn't click in your head.
Well, I've worked out that in the US, each state is like a separate country.
That's the way it was originally, and then it still kind of is like that.
Man, that's crazy. Because here in Canada, man, we're all one. We're all crazy.
So at least, so April. What about April?
Man, getting off to a great start. I have to say that, we were saying, February, March, no, not so cool, not so cool. And usually what happens is most beginner traders, they sort of go through the sort of euphoria of that Christmas run. And then it's the sort of, the people have taken the punch bowl away from the party, right? So January, February, March, it can be quite rough. And usually by the end of March, most beginners are quitting. They can't tolerate it, right? They're like, that's it, I'm done, I'm out, I'm cashing in. And then bang, the market just takes off. And it was literally the last day of March. It was the 31st of March where things started to turn. So if you had no resilience, you missed out on this recovery. I mean, I saw some pretty spectacular numbers over the last couple of days for some of my clients in terms of recovery, right? So they're not back to where they were. They're not back where they were at the end of December, but they certainly, they're at least 80% of the way back. So nice. April is traditionally quite a good month. And, what you've got to do is you've just got to make sure that you can get through February and March to be able to play in April. So April's a good month. We've had some really good things. I mean, if you recall a couple of weeks ago, I was saying to you, you know what? You got to keep your eye on the semiconductor sector because this is where it's going to lead the market. If the market's going to go up, that's where it's going to be. And, we did a couple trades. We did a trade on AMAT. We did a couple 100% on that. We've got, we did some trades in the XLK ETF. We did that one well. Looking at semiconductors, we did SOXL as well, which is up around 70% in the last couple of days.
I have a.
You got that one?
Well, yeah, I haven't. I'm in that one. So
awesome. So the thing is, you've got to really take it to heart that you've got to go play to where the ball's going to move to, right? And this is something that many people don't do well, is identifying where money is moving from and where it's going towards, and how strong is the location where the money is landing, right? Because it might just be a temporary thing. It might just be a stopover and then a change into another flight, right? So you've got to keep that in your mind as you start planning which sectors you want to start hitting for trades or how you find them. One of the things that I find really useful is if you go through the rule sets and you sort of start with your dominant rule, right? So I don't know many traders that trade on one rule only. Like it's very, very seldom that you'll find a trader that will trade on one rule. If RSI does this, I buy, right? I don't think that people do that a lot. So I have sort of like a triple layer, right? I have one indicator that starts first, and then I have the second, then I have the third. And it's always about, look at the quality of the indicator within the sector that's moving, right? Because even within a fast moving sector, you're going to have crap stocks, good stocks, and mediocre stocks, right? And you want to really go for the ones that are moving from mediocre to good. The ones that are already there at the front of the pack can only come down. The ones that are sort of in the middle could go to the back, but if your indicators are saying they're moving forward, then go for those ones, right? And that's how we found AMAT. I think there's going to be some opportunities on Intel. I think that there's some opportunities on Hymax. We also went into ON Semiconductor as well. So we're quite long in the semiconductor space. It is slightly overextended on a daily trade basis, right? So you've got to be careful with the pullbacks. So make sure your exits are right. But this market is just, it's phenomenal. It's phenomenal. I think if you go back, I think it was about 2 or 3 weeks, there was that Friday afternoon. And I think I mentioned it in one of my webinars where I said, you know what? It was the first time I'd fetched my son from school in a year. It was 3 o'clock in the afternoon. I was like, that's it. This market is done. I really am bored. I hadn't left the desk. I hadn't left my desk in a year to go and fetch him. So I get in the car. I go off. About 10 minutes after getting in the car, one of my clients calls me and says, what do I do with this trade? You know, like, and I go, well, what's going on? I can't see anything. And he started to explain to me. I was like, jeepers, maybe I need to leave my desk more often, because if this is the case that's going to happen if I'm away, oh my God, it was that Friday and the market closed up, and it was that close, that one candle at 355 that almost switched the entire market. So, you know,
it's like if you're waiting on your food at a restaurant, you just have to go to the restroom and then there.
Oh yeah. Oh, absolutely. And it's the one time that you're going to take a 30-minute break, right?
Exactly.
Yeah. You the Taco Bell stuff decided
you should leave your desk more often, man. Help us out.
I should. You know, I wouldn't say I'm getting better. I think that if I have to look at my own trader development areas, one of them is, you know, a pot that you watch doesn't boil fast, right? So, you know, you have to sort of let the market do its own thing. And I am getting better. And I think once the jiu-jitsu schools open up, I'll probably be a lot better, because it will force me to go away from the table, you know, set the trades and leave them.
Well, this is something that I'm kind of struggling with. So is to work the trading strategies, not just around the market conditions, but also around my lifestyle and my workload that fluctuates pretty wildly. So I think that's something maybe, you know.
Well, the one thing that helps people is you've got to remain disciplined as to how you manage your positions, right? So if you've got positions that are, you know, you went in on the daily chart, you're using the daily chart to manage, there's absolutely no point in getting frustrated or flustered with any intraday movement. It's not really going to be useful, right? Because the next candle will print at the end of the day. So it's staying disciplined in that mindset. That will help you a lot. So if you set up trades, you know, debit spreads, anything that's a two-leg position is easy to manage on the way in and the way out, right? Because your upside is capped on the upside. You know, obviously your profit is capped on a credit spread, right? Oh, sorry, on a debit spread as well, right? So all you do is you just set your profit expectations as a percentage of your maximum gain, set the price and leave it, and let the price come to you. I always say to people, you know, if you want to avoid having to do daily management, then don't do single leg trades, because single leg trades will require you to look at the charts and, okay, is it a reversal happening? Okay, I'm out. But double leg trades, two leg trades tend to be easier to manage from a sort of set it and leave it kind of thing. You know, getting the balance between credits and debits is important as well. You know, you don't want to overload on the one side. You know, it comes down to, are you getting the best value for your investment dollar? You know, that's where it all comes through.
I know you're not a fan of any kind of stop loss in general. I know you do set some on, say, short positions, but what about an auto close for, you know, an auto stop for something if somebody had trouble managing the time?
You know, I think stops are, when it comes to options, because you have an inherent volatility within the position itself, you can get thrown out pretty quickly, because the spread during the day can widen, and it can widen and narrow outside, and you know, it can sort of hit your stop. I would avoid them. And I'd rather look at the daily charts at the end of the day and then decide, because you're trading the option, your price is affected by liquidity, it's affected by volatility, it's affected by the underlying volatility. So you've got to really be careful. I wouldn't do it on an option. I would do it on a stock. I wouldn't have a problem doing it on a stock. However, you've got to understand how stops work, right? So when you place your order and you've put it into the system, those orders go to the market, right? So they are now visible on the trade book. And you have a whole lot of systems that sit within the market that will hunt these positions out. And you can usually see it. So generally, when you look at the candles that are forming on an index, for example, when you see a long candle and a thin little body, all right, so it's a long candle, that stops. That's where those systems go in and they hit these stops. So because they bounce off that number, right? So when they hit that number, and it's usually a key support line or a moving average, because everyone reads the same books. Like, this is the thing that most retail guys don't realize, is that if you think you're smart and that you've got a trade idea that's unique, I can guarantee you there's a million other people that have the same idea. So when it comes to retail guys, they all read the same books on Amazon. They all watch the same garbage on YouTube. So they're all going there and doing the same things. And all we have to know is look at the graph and we go, okay, there's the little line that says it's 1220 is the exit price. The moving average is at 1220. And what these systems do, they go out and find every single person who's put in a stop loss at 1220. So you go to work, you've put your order in saying, you know what, I'm comfortable if I lose that $20. And by the time you get home, you've already been wiped out and the price has gone up for the day. So that's the danger of stop losses, right? So
yeah,
if it comes down to how am I going to manage my risk, I would rather just position size it small enough for me not to worry about the risk. Then just let the trade work for itself, right? So if the trade, if you went in and you've seen my mathematical model, right? So if we've got an 80-point score trade, and every day I go in and I look at it and I go, oh, it's 80, and tomorrow it might be 75, and then it might go to 70. Now it's dropped down to 70, and 70 is my threshold. Okay, probably you want to exit at that point, right? Because I'm just assessing the trade on the same basis by which I went in, rather than setting a number that says, oh, if it hits this price, I'm out. Look at it from the quality perspective rather than the number. The number will throw you out too early, then you lose. And when you lose, it's a no regrets move, right? So I think it's all personal choice. For me, I've lost more money unnecessarily through the addition of stops, as opposed to just sitting and using some brain power and looking at the graphs and then assessing it on the quality of the signal. I think the quality of the signal will save you in the long run. And that's what happened with Google. You know, if you'd stuck, I'm going to share my screen and we can have a look at this Google trade. You know, when you look at Google, let's see. I'm just moving these around. So let's have a look at Google, and I'm going to just build a little quick chart here. So if we look at Google, Google went through this period over here, which was pretty darn depressing. Let me tell you, this period where you see these little red dots starting to form, that period here was incredibly depressing to be in Google, because you look at it, you go, it's one of the biggest stocks in the market and it's doing nothing. And this small movement here, this pullback from the third Keltner channel down to the midpoint here, this was pretty brutal. So if you had gone long after the last earnings, if you'd gone long at the top here, this was very painful, very, very painful, right? This was a drop from 2142 all the way down to 1996. That's pretty painful, especially if you were in options. So when you start accumulating your position, I think we started accumulating here on the slingshot. So as soon as we started accumulating, we can see the type of squeeze started to switch from being mid compression to high compression, and it just did nothing. It was the most frustrating trade. But here's where it starts getting interesting. When we start seeing that type of movement here, we know something is coming. Something is coming. And when we start seeing volume starting to level up as well, we know something's coming. So what we did was we took our bull credit spread Okay, we had our debit spread. We took off the short call and we added one extra long call option. So we landed up having 3 call options. They were out of the money. They were the 30 deltas. And this was probably our biggest payday we've had this year so far. So in a single day, I think there were 2 trades up about 200% each, right? So on Google, but you've got to be watching this stuff. It's a difficult, if you had a stop loss put in place, you would have been kicked out over there. All right. It would have gone through, hit the middle. You would have been out. You would have lost maybe 40% of your trade. And if you had the patience to just sit through and look at the quality of what's building, you would have been able to sit through this and you would have been at this point. So this is the danger of stop losses, is that it would kick you out before that has happened. So one of my rules is I don't exit a trade unless the squeeze has fired in one direction or the other. All right. So if it's in the upside, if this has gone to the upside, I hold. So yesterday we took profits. When it hit the 3rd Keltner channel, we took profits and we reset the trade 100 days from today using a portion of the profit that we made. So it's a risk-free trade for us.
You think there's still some more upside there?
Yeah, I think so. This squeeze, if you look at this is predominantly a mid-level compression squeeze. The mid-level squeeze tends to run for at least 5 days. And the longest it's been is around 14, right? So we should have a run through to earnings. So I think that we should see it rise a little bit up until about the 26th. I want to be out before earnings. So although I bought the 102 expiry option, I'm probably going to get out somewhere around here and take my chips off the table, wait for earnings, and then we'll see what happens after earnings. So Google does, it rallied after earnings here. It rallied after earnings here. So what we do is we might be able to add maybe a few trades. Maybe we could add a put spread as well for some credit, and then play the put spread after earnings and hold the long call. We'll decide closer to earnings. But this is yeah.
So just in general, so what types of earnings trades that do you normally do? Because this is the earnings season. I know a lot of people have questions about that.
I like
earnings is kind of a crapshoot with regard to whether or not it's going up or down. But what do you do?
No, I think the way to play it is don't hold it into the announcement. So don't hold the trade on the day of the announcement, right? So if I know that, Goldman Sachs is announcing their earnings before the market opened on the 13th, right? I'm going to be out by the 12th.
So you like to run up to the earnings?
I usually do the run up into earnings, right? So the 10-day sweet spot. So this is called the sweet spot. The 10 days before and the 10 days after. The 10 days after tend to see a volatility crush, and the 10 days before tend to see a volatility rise. So you usually play long calls in, put spreads after, right? So that's not a general rule, but it's almost like this concept that you should be trying to follow, right? I wouldn't want to be looking at doing long calls after earnings when expectations have already been met, unless it's a gap and go, right? So if the stock comes out, if Goldman's jumps up and then it starts to do this, you go with the long call. Depending on what the IV is. If the IV is high, we would do a bull put spread at the same time and finance the trade. So I like earnings season, but not every stock is worthy of trading for earnings, right? So I have some algorithms that will look at things where, 75% of the time, we've had the stock has rallied into earnings. Okay, well then focus on the ones that have got a history of tending to rise into earnings. So that information is pretty easy to find.
Do you play straddles on some things?
Sometimes I will play straddles. Usually with the straddle, what it does is it's a much more expensive trade than doing a directional bias, right? So if I'm going long, I only have to buy one leg. Here I'm not taking a directional bias, but I have to buy 2 contracts. So it's one call, one put, and it's almost like it's this indecisiveness. Now the thing is, straddles are not built equally. All right, so the upside on the call side is never the same as the downside upside on a put, right? So you're obviously going to have one side of the chain that's going to be far more upside orientated. All right, so if it's the calls that have got a better delta, you're going to even it out in terms of the money you put onto each side of the trade. But in terms of your opportunity, you know, I often feel that straddles are like covered calls, it's not covered calls, they're like long calls in case I got it wrong. You know, like in case I'm wrong, because you don't know. I was saying this to one of my clients the other day. You don't know which trades are going to work. Like, I don't know which trades are going to work. When I look at the trades, I have no idea. And no one can tell you for sure this is what's going to happen. What we do is we look at the probability of something happening. That's how trades work. It's about having better probabilities than something else. So, you know, it's important to always keep that in your mind. So if I do a straddle, I know something's going to happen. I need a big move in one direction or the other. The stock is either going to jump up a lot or it's going to fall down hard. It's one of the two. If it just stays and does this, I lose on both sides. So my loss is much bigger. My upside is better, but I'm protected because I don't have to be biased one way or the other. Whereas most trades, you have to have a directional bias.
So you like to pick stocks that historically do something big on earnings.
Yeah. And I think we're in that sort of market stage. I think what's going to happen is stocks are pretty richly valued right now, right? So it's going to take a little bit of work for the market to be convincing people that there's more upside, right? So you've got to bear in mind as well, a lot of the winners during the whole COVID crisis are really hammered, like really down. I think I've got a watch list here that I watch. So, you know, if I just look at these stocks, just ignore that data. It's because I've got too many pieces of data on the screen. But if you look at these stocks, these were all the stocks that made huge amounts of money during COVID, right? So if I look at the sort of 52-week high and I look at the last price, look at the differences. I'm going to open up, let me just add some extra columns in here. I'm going to add in how many of these are going to be below their moving averages. I just want to take a couple of these off and then, all right, so what we do is look at how many are below their averages, right? So where you have at least two of these red blocks relating to these stocks. This is crazy. It's like a lot of these stocks are really trading at very, very low levels, right? So here we've got PetMed, you know, it's below, it's 21, it's 200, no, below the 21, below the 50, and it's accelerating, right? So now this is an opportunity. And if you go and have a look at PetMed as a stock, let's see if we can.
Do you think some of those are going to see a resurgence?
I think so. I think so. Yeah, look at this. So, you know, if you look at this, I've got a Keltner channel buy signal. I've got a compression that's forming. I've got an oversold buy signal. I've got a bullish divergence here on the MACD. Like, this is a potential opportunity. I'm trading towards the middle of the market maker move. I've got earnings coming up. You know, these are the kinds of opportunities that can be found just by looking at what went well last year. Where is it now? You know, it's pretty good to look at it like that. But let's just quickly have a look at the indexes and see where the market is rotating, because this is an interesting thing to watch. There are very, very few things that are bearish right now. All right, let's just add in the column. So if we look at the moving averages, I'm going to take those out. And we're just going to move this over here. Look at what's bullish. There's far more green on the screen now compared to where we were maybe 2 weeks ago. All right, so having a look at where things are happening, finance, XLC, so the Netflix of the world, Facebook, technology, building materials or materials, real estate, utilities, like literally you can go into any one of these sectors and you can still find opportunities. Where the big one is Bitcoin. Like, honestly, I think this is where the big opportunity lies, is still within Bitcoin. This is so incredibly bullish. You know, if we just move this across, I think there's a lot of upside still here. You know, hit a high of 61. It's going to open at 59,000.
Which plays? I know Mara did a really big.
Yep. So we've got Mara that we have. We've got some fairly big trades on Mara at the moment. A lot of them are long dated. You know, it might be time nearly for us to reset that very long dated trade, but I think there's still upside here. We've got RIOT as well.
What about, yeah, I was looking at this one actually.
Yeah, this one looks good too. I like the fact that there's still space between where we are now and the third ATR. So there's definite upside room here. We're in the sort of 10 days after earnings kind of thing. I like Canaan as well. The only thing that puts me off Canaan a little bit is the fact that it's in China. You know, there's a little bit of it's not a COVID on stocks, but it's, you know, you've got to be very, very careful about what happens in the East. You know, whatever troubles happen there, it tends to just wash through for us, right? So I'd be a little bit skeptical here. It's not as high quality setup as Mara. The other one to look at is SI, Silvergate. I think that this one is probably the next one to go up. I think there's a big move coming here. It's a high quality setup as well. So worth looking at if you want to have a look at a different one is SI. The other things to look at are definitely Ethereum, the Ethereum Straight, which is through Grayscale. It's an ETF. There's a small premium that you pay here. And this is the biggest challenge about crypto.
What's the ticker on that?
ETHE.
Okay.
So the problem with crypto, the way that I see it is, one, it's hard to use. And it's hard to trade because, A, the trading platforms that you're going to be trading it on are going to charge you an arm and a leg in terms of margin to buy crypto, right? Just in TD, I think if you want to trade one Bitcoin future, you need $150,000 just for one contract. So it's a very, very expensive contract to trade as a retail trader, number one. Number two, the per unit cost of a Bitcoin at $60,000 puts it out of the realm of buying for a large number of people, right? So I'm not going to tie up that type of capital in a crypto. What I'm going to do is rather buy the stock of the companies that actually mine the stuff. So Mara, RIOT, Canaan, those guys. And then if I'm going to be buying Bitcoin or be exposed to Bitcoin, you know, what I'm going to look for is, you know, maybe just buying this ETF. I mean, it's not an exact match to Bitcoin itself, but there's upside. The premium has disappeared from the trade. So I think about 2 months ago, you would have been paying around a 15% premium to net asset value to buy this. Now that's pretty much eliminated. I think more and more financial sponsors are coming out offering Bitcoin related or crypto related ETFs at low price. So it's worth using this as not as a replacement to cash. I don't replace cash with anything but cash. Right. So this is just you add it on the side.
Yeah, the crypto space is really interesting. I don't fully understand all of the technology, and I don't have a crypto wallet.
Yeah, I can't use it. I mean,
I'm gonna figure out how to use it eventually, but I think it's I don't really care how it works if I can make money on these.
Yeah, absolutely, and this is why the vehicle that you use needs to be liquid. It's like real estate, right? Like I enjoy buying a house. If I could buy houses for cash and things like that, I would do it. But you know, for me, it's like, would I rather tie my money up in a house, or would I rather trade my money in a real estate ETF, for example? Because liquidity has always been the issue for me. Is I don't really want to have my money tied up in a fixed asset that's going to take me 6 months to liquidate. You know, in the best of times or the worst of times, whatever. I think with the crypto space, I think there's a lot of hype. And what we haven't factored into it is the fact that the governments can change the rules. You know, if governments banned it, what would happen if in the US they decided to tax crypto gains differently from stock? It would be chaos, right? And all of a sudden you're going to eliminate a whole lot of people that have been trading the currency. What if they do like they did in India, you know, where they start limiting the ability for citizens to actually hold and trade it? You know, we haven't factored that in, and I think you've got to be really, really careful. about how much you rely on that little asset. You know, in Canada, I can't buy crypto through my credit card. I can't even do those monthly purchases on some of these big apps, right? They've just, like, the banks here won't allow you to do it. So it's not as easy to buy as
You just got to get onto the dark web, Chris.
I'm sorry?
You just got to get onto the dark web and buy all this stuff.
Dude, I thought the dark web was just surfing the internet without the lights on. I'm not into that, man. But I'll tell you, it's an interesting space. I think that it's definitely going to change the way in which we look at the world and how we look at finance. The sort of the NFTs of the world and the decentralized finance is going to become a huge part, probably not in my lifetime. I don't think the economic model of the world's going to change while I'm alive, but surely my son will experience some far greater diversified financial environment than I am. So, you know, we probably just have to be, you know, I would definitely be exposed to it, but the degree to which I want to be exposed needs to be contained. Like, I still believe in biotechnology and technology and those things over crypto, because I think the rules can just change too quickly and then we have a problem.
So what are you looking at this week? Like, I know you have a lot, but what are a couple of your plays this week on Watchlist?
So what I've got here on the right-hand side is a little list of stocks that I was going through before we started the call. And, you know, this last night, you know, I went through about 300 stocks, different setups. And what I think is really important at the moment is making sure that you've got alignment between the market stage of the stock and the squeeze. These things are the two things that will align the most, right? So what you want to know is, has the squeeze fired in the direction that you want to trade? And is the stock being accumulated? And is its price rising in an accelerated manner? All right, those to me are the keys. Now, if you can't work out you know, what market stage you're in because you don't have access to the information or whatever, you need to look at the ADX, the MACD, and the RSI, and then the relationship of the EMAs. So if you've got those information pieces, which most charting platforms have, you can align them, right? So you can still have, you know, let's take, for example, TSM. TSM, for 37 weeks, it's been accelerating in terms of its price. It's now accumulating on the daily. It's changed its trend over the last 2 days. My ADX is high, above 25. So directionally, I'm still quite strong, but my MACD remains negative. So when my MACD goes positive and this goes green, I might have a trade. And then this will need to go into the green stage as well. So when we look at some of these trends, we need to look for as many greens as possible, right? So ETN, 32 weeks, 3 days, squeeze is already fired long. I've got an ADX that's below 20, so it's choppy, but I've got a positive MACD and I've got a high RSI with bullish EMAs. So this one looks like a really nice chart to look at. So let's have a look at it. ETN. All right, so let's see here. So we know from the graph, oops, let me just get this back. There we go. Ah, there we go. Sorry, it looks like a bit of a mess, but the thing is, what I want to do, I try and put all my rules and everything that helps me determine a trade on one screen, and I color code it. So what I look for is, what is the dominant color? If the dominant color by means of the rules, which are these ones at the top, is green, then I'm going to be pretty keen to go into the trade, right? So I've got some Keltner channel signals that have told me to go in. I'm trading within the expected move of the market maker. I'm down towards the 1 Keltner channel. I've got room to go to the 3rd. I've got earnings coming up. My squeeze is fired long. My volume oscillator is showing me that there's an improvement. I've got my MACD is positive, and looks like there's going to be a bit of a bullish crossover here. So ETN, we've already gone into the trade. So we've been in the trade already for a couple of days. The option that we went in initially with a spread, what we're looking to do now is actually eliminate this short call and just hold the long 130. All right. This one's already up 46%. Maybe also an extra trade that we could add on here. Can't really add a put spread. I would have liked to have added a financing transaction here as well, potentially just to reduce my cost. But the IV is still very low down here at 5%. So I'm not going to do that for now. But this is a definite trade worth looking at.
You said you'd like to be a little bit early rather than a little bit late.
I think you've got to find the balance, right? So with Google, I was early. And it took me, it gave me a few gray hairs, you know, on that pullback. So it was a little bit dicey at that time. I think what you've got to do is you've got to find the balance between developing those trades that are on slingshots and finding the ones that have already fired long. All right. So when I know directionally that I've got a bias that's going to the upside, and I've got this evidence of further momentum on my side, then I'm more comfortable doing that trade. So I'm comfortable taking that short off and holding the long. So I know that I've got that upside. I've got more confidence that the stock is going to move up in price. Doesn't mean it will, but I've got more confidence that it will. The next one to look at is STX. You can see here that I've got high ADX. My moving averages are stacked. I'm in acceleration. I'm bullish. I've got lots of signals. There's my slingshot. All right. So look at all this compression that's been forming back here from the 4th of March. We've had the squeeze that's been developing, hasn't actually released yet because it's gone from a mid-level squeeze to a low compression squeeze. And we've got 3 there. The average squeeze for us here is about 5, with the longest being 19. So we've probably got about 3 days more of rising prices over here as well. Bullish crossover on the MACD. I think we've got some momentum that can pull us in towards earnings. I would want to be out of this trade fairly quickly. So we're already in this trade again. We got a spread initially. We can close off the short call here, hold this one. We're up 18% already on that trade. Let's see where that develops. I might add actually to this one as well.
I have a spread on that that's up about 24% right now. So
nice.
Yeah.
So this one, the other one that I was looking at was XLC. Now, XLC being an ETF makes it a little less risky in terms of having, you know, exposure to one stock or another. So I like the exposure here. Bullish momentum. We've got bullish angled on the EMAs. ADX is still a little low. I prefer it to be a little higher. Keltner channel buy signal. I'm at the bottom of the 3 ATR range. And the squeeze looks like it's firing long. My volume oscillator is showing momentum to the upside. I like XLC. And the other trade that you could look at in exchange or in comparison would be Netflix. All right, Netflix, obviously a big component of XLC. Let's just remove these Fibonacci's. Buy signal, firing long, squeeze that's been in play since the 17th of February, rising into earnings. So I wouldn't want to be holding this too long. All right, bullish crossover here. MACD is about to go positive. IV is low, so this is definitely a long call or a call spread trade, not a put spread. And we would probably look to take the call option from here and hold it up to the 3rd ATR at 568. So there's about $28 of gain. If we look at the trade, we don't have one yet. I was going to do it today, but if we look at the trade that I would do, I would probably go out the dates here. The earnings are after the close on the 19th. So I want to be out by the 18th. So by the 18th, I'm looking for a move that would take me up to 565. So I'm looking for a $25 move, which is here. 16th of April, expected move is $25. So I've got 2 choices. I can either trade in the money. I can go for the 60 delta call option here, which is going for around 13. The 537, I could do the 537, 560 vertical. That's going to cost me $880 with an upside of 1370. So it's better than 1-to-1. Plus, I've got all those momentum signals pointing in that direction. That's option number 1. It would cost me $800. Now, the other alternative is to look at the Delta 30 option. All right. So one of the things that I like here is that there's a lot more open interest sitting here. You see this 3957 that's here. Now, the cost of this option would be $460. Okay. If Netflix makes a $25 move by the 16th of April, all right, the price of this option is going to go from 460 to 868. So that's almost a double for half the price. So if you think about it, the put spread, the call spread was double the cost with a little bit more certainty, all right, in terms of its reward, right? But it's capped upside. If Netflix does more than the 25, I can make more than a double on this. So if I bought 2 of these contracts, it would cost me the same. I would be looking at around $1,600 as opposed to $1,300. If I look at it from a risk reward perspective, the spread actually gives me what I'm looking for as opposed to the long call option, because the spread was a little further out in time anyway. I think we were doing the 23rd of April. We were going to go out a little bit further. So I like the spread because of time, and the risk reward is almost the same as if I was doing that long call option at the 30 delta for the 16th. I could do both. All right. So this is another thing, is that you could look at them and actually do both. If the sum of the two was within your allocation rules, in terms of what you were willing to risk, you could do both of the trades. You could do both the long call and you could do the call spread. Now, the third angle to this is, rather than doing a call or a call spread, we could use a butterfly. And the thing is, I want this butterfly. It's now on the 19th. So there's the 16th. So I would probably look to do this to the 16th here. It's a $25 move, so 565. If we pin this at 565, well, let's pin it at 560. Let's buy the butterfly a little bit lower, right? So what we're going to do is we're going to go 550. So we want to try and keep it cheap. 550, 560, 570. It's going to cost me $112 for upside of 888. But that would mean that Netflix would need to end on the 16th at 560. All right. Now, remember, the market's already telling me a $25 move. I think Netflix might hit the 565, not the 560. So I cannot be sitting back looking at the expected move, oh, sorry, the max gain here of 800 and saying, I'm only going to exit at 800. My intention here would be to exit when this is worth about $3 and get a double. So I would probably buy 2 of these. If I buy 2 of these, it's going to cost me $224, which is now a third of what I was originally spending on that long call debit spread for the same degree of upside. But I've got to be careful because the chance of me winning here is a lot less. So my exit price on this would probably be around 112, 224. It would be around 336. So I would set an exit order on that at 336 the moment that I place the trade and then walk away. And I'd have to watch it because the spreads might, go all over the place like an accordion. But that might be another trade, right? So there's 3 different trades you could do on Netflix, all with varying degrees of capital down and upside potential, and you can mix them. You can use maybe a call spread to start, then you could add the butterfly, and then you could do the long call. There's different ways and different methods to how I would do it, but the candidate is very, very strong. So Netflix is one, XLC, STX, ETN. I've got my list here. Let's have a look at a couple more. So CCL was also looking pretty attractive. There was quite a lot of talk now of how the cruise lines are going to open up again after July. Now, the difference here is we have the slingshot forming. All right, so we have that one yellow bar. We've got a buy signal here. We've got earnings today. Yeah, so earnings should be this morning. So I would probably just wait, do this later on, see what happens. Earnings were always a bit muted. Look at the last one. Here we have this sort of flat. There it was sort of flat and then rose after earnings. So maybe the trade is going to be somewhere around the 16th anyway, but keep it on a list. The other one that I really like, I only discovered this last night, and I'm going to keep it on my watch list, is this triple leverage South Korea ETF. I mean, who would have thought? I love Korean food. So if anyone out there is a maker of Korean food, you can always put me down to do taste tests. I'll do them on YouTube.
Korean barbecue's delicious.
Oh man, their soup. Oh, don't get me started. It's great to have one of their hot chili soups before you go do jiu-jitsu. Because you could just say to the guy, listen, if you do a knee on belly on me, it's game over, man. It's game over. Yeah, I'm going to tap out. So this one I like. Look at the 200-day moving average. Sorry, the 100-day moving average here. You see how we hit the 100-day here? And we're sort of coasting along the 100-day moving average. Now, a couple of things. It's a triple leverage ETF. So this one you got to be a little bit careful about, okay? Because there's a lot of volatility that sits within South Korea. One of the things to also bear in mind is if you want to play semiconductors without playing SOXL, play South Korea. All right, so South Korea as a proxy for semiconductors, we've got the squeeze firing long. It's a triple leverage stock. Let's have a look at it here under FinViz. Let's just have a look at it here.
So do you like shorter dated trades on the triple leveraged stocks, or does that matter?
You know, if I was buying triple leverage stock, I don't mind holding it.
Well, I'm sorry, the options.
Oh, the option? Not necessarily. SOXL, we tend to hold long term. TQQQQ, we'll also hold a little bit long term. But this is the thing that I like here. You see this downward channel that's coming in? You see the breakout to the upside? This is the pattern I like to trade. So this is definitely on my watch list as a potential trade. Not a lot of volume, right? You can see how small these candle bodies are. So it's not a lot of volume. This might be the best to buy a stock rather than the option. So I will definitely be looking at this today, but this looks really, I like that sort of pattern. This sort of pattern is very, very good. I just saw an alert for for Western Union. So I had an alert on Western Union for a potential trade. So, you know, I think we might have a trade forming here. Let's just see. I will just quickly move it into this one, Western Union. A little bit of a sell-off.
This is the wizardry in real time right here. This is
so
the,
here. Let's see. All right. Oh, I've got to fix this. I don't know why it does this. Okay, so Western Union trading above the Ichimoku cloud. That's really positive. Above the EMA cloud, we've got this strong trend that's starting to form along here. Now, there's a couple of things here. So in the algorithm that I'm using here, when these start pointing up, it means the forecasted price movement is to the upside. So I think we may have a trade forming here, refiring of the squeeze going long. So I would certainly be looking at doing something on Western Union over the next couple of days. Let's have a look at the hourly, see if anything's changed here. Slingshot, but sell signal to the downside. As long as it stays above the cloud, the trade will stay intact. So I'm going to keep my eye on this one and see if there's something that can form. But yeah, I would definitely look at ETN, Netflix, STX, XLC, and keep on your watch list KORU. I think that this one might be a nice trade. Look at the 6-star setup. This is my profit zone. So I think we've got potential to move from 42 up to 56. This looks like a good trade. I might actually just buy some stock. I might take some profits out of AMAT or one of those other trades that we have and stick it in there. So, you know, there's lots of opportunity. At this point, there's loads of opportunity.
Outstanding. Well, Chris, appreciate the insight as always. And we will see you again next week.
Man, always good to see you. Take care. I'll see you next week. And you know, anyone who wants to know anything, just stick some comments in the boxes below and we can answer them.
Sounds good. Later on.
Stay safe, Brian. See you soon.
Take care.
See you, man. Bye.